A lot of economic data points today, more disappointing news on the labor market, but a few better signals in the form of leading indicators and the Philly Fed. So where are we headed the second half of the year? Let's check in with Brian Bethune, Chief U.S. Financial Economist at IHS Global Insight. He joins us live from Lexington, Massachusetts. Brian, welcome.
Yes, how are you doing, Laurie?
Not bad, thank you. So you raised your second half growth forecast to an average 2.2% expansion pace from the 0.9%, which I believe came from a July forecast. Why?
Well, really, there's a couple things. One is consumption spending is going to pick up in the third quarter at quite a strong rate. That's the primary reason why we raised our forecast. There's also better indications in terms of export markets. Exports have picked up for a couple of months, and there's a little bit more momentum there. So those would be the two reasons: a little higher consumption spending in the third quarter, and better export performance than what we had previously.
What's going to drive the consumption spending? There's been so much talk and concern about the consumer in this climate.
Well, exactly, and indeed, the big surge in consumer spending is going to come from the automotive programs, the Cash for Clunkers program in particular, which is moving ahead at a very rapid rate, and that will definitely push consumption up in the third quarter, with possibly some spillover into the fourth quarter, but mainly the third quarter will drive that.
And you also talk in some of your research about the inventory cycle, that you are expecting an inventory build or to level off these low levels and then really to start building now. How much of the economy, how much of a driver is that going to be? What percentage?
Well, it is very significant in terms of the change in inventories. It was a huge drag on growth in the first half and in the second half of 2008. So as we get out of that negative inventory cycle, it's definitely going to add to growth, possibly 1 to 1.5 percentage points.
And that brings us to talk of the labor market. Initial jobless claims today unexpectedly rising by 15,000. What is your take on the labor market unemployment?
Well, in terms of the labor market trends, it's still not very good. Even though we are moving to what we call a production recovery, meaning that production in the third quarter will pick up and will pick up in the second half, we don't expect the employment markets to turn around until 2010. So we're still looking at some labor market contraction here over the next few months, and that's what we're seeing in these labor market indicators. Initial claims are still at high levels. They actually moved up for the past couple of weeks, and it's going to be some time before they start to come down.
So with a weak labor market, struggling consumer spending, some of the mortgage data was a little bit concerning today as well. Are we looking at a whole new type of economic landscape? If the consumer was the key economic driver of years past, are we looking at a different pie, if you will, for what makes up the U.S. economy?
Well, yes, I think the sources of growth will change, and as we look forward, this is partly going to come from the turnaround in the housing market, so that's a good item there in terms of the change in the dynamics of residential investment finally turning positive. Beyond that, there's going to be some improvement in exports because the global economy is definitely picking up. So if we're looking forward, actually, the growth is better balanced. It's not as dependent on the consumer. It's not as dependent on housing prices going up and equity extraction and the kind of things that led to the rapid expansion in 2006 and through 2007.
From reading some of your... I'm sorry, Brian, we're limited time, and I want to get this last question in about inflation and the Fed. I imagine you're cool with inflation where it stands right now, and lead that, if you could, into your thoughts on Bernanke and whether or not he deserves another term here.
Well, yeah, absolutely. The inflation story is one of the very positive things that's going on. Inflation is tracking at very low rates. The core inflation rate is at 1.5%. That's actually below the Fed's target. So there's no reason to get concerned about inflation. That gives the Fed room to keep rates low and support the recovery. So that's a very good prospect in terms of gaining momentum as we get into the middle of 2010. I would say from that point of view that there's some tailwinds behind Bernanke. We're over the worst of the crisis.
Okay.
The economy is starting to pick up, and so he's got a little momentum behind him in terms of the Federal Reserve looking better now than it was a year ago.
Sorry to rush you. Brian Bethune, we're out of time.